Hey guys, it's the first Friday of the month, so happy Friday. But also, more importantly, traders, we all know what the first Friday of the month means. It is NFP day, the US employment situation, and we knew that today's one was going to be a big number and it was likely to move the markets. But actually, it came in even higher than the consensus expectation. So it came in at 943,000 jobs added, and the previous one was also revised upwards to 938,000. So in terms of the Federal Reserve, this is kind of a big deal. We know that Jerome Powell has previously said that he wants to see some strong job numbers in the coming months. He was saying that on the 28th of July, so not that long ago. He wanted to see strong job numbers in the coming months before they begin tapering. So we've seen some strong numbers. The markets are reacting a lot. We'll come on to that in a second. But although these numbers may be positive and feed into this hawkish tone for the Fed, the number of unemployed people still remains well below pre-pandemic levels by about 5.7 million people. So we may still have some way to go until the US achieves full employment. But still, it's en route to the Fed's goal of achieving substantial further progress in the labour market, so this is good news. And it seems like there are some good signs that plans around tapering may be announced in the next few months. Fed Governor Christopher Wallace has also recently said that higher jobs gains in this report we've just had and the next one would likely mean that an announcement is coming in September. So it's possible that we could start to see the wheels in motion as soon as the Jackson Hole meeting later this month, which is what we've been focusing on. However, the headline number isn't the only important part. In fact, the composition of the jobs across sectors is probably more valuable at the moment, and it's definitely something that the Federal Reserve will be looking at rather than just looking at the headline numbers. So it's important that we don't just fixate on the big number and we read between the lines, because there may be distortions in certain sectors. Now, according to the NFP report, in their words, staffing fluctuations in education due to the pandemic have distorted the normal seasonal build-up and layoff patterns, likely contributing to the job gains in July. Without the typical seasonal employment increases earlier, there were fewer layoffs at the end of the school year, resulting in job gains after seasonal adjustment. So, although the high numbers are good, this month's numbers are being boosted by some unique quirks due to the pandemic, which may not continue in future reports. So something to keep in mind, and if the Fed are going to delay tapering, it's likely to be because of this sort of thing. So let's have a look at the markets. The Dow, as you can see, US equities here, this is the hourly chart, that range we've been looking at for a long time. It's pushing its way out, but it's getting attracted back in there. If we look at, for example, the daily chart, we can see it's trying to push up to all-time highs, but there's a lot of resistance. We knew there was a strong path of resistance there. If we head to the 4-hour, what I've been looking at, and I said it this morning in our morning markets, was this longer term, just shallow trend covering those higher highs was strong. And last time we came off there, we started to form some shallow bearish structure, and that's exactly where the price is struggling now. So I said this morning, we wanted to see how the news came out, like what the number was, how the market reacted, and then maybe we'd be able to trade the fade into this last bit of the session, this afternoon session. So if we can close inside there may be an opportunity for that. But in other markets, if we look at gold here, wow, this is one of the big movers from that NFP announcement. We could see that structure was weakening around here anyway, but now it confirms that being the end of the wave. This is the daily chart, by the way. We broke through the unconfirmed trend line, which we can actually get rid of at this point, so let's do that. But what we can see is it's approaching the bottom of the previous wave. That's also the B point of this Fibonacci range. And if we break through there, we'd be looking then at the extension levels as being the next strong path of resistance that we'll be keeping an eye on. But this B point will be a strong path of resistance and could therefore hold up the price. So it may be that we, now that we're getting closer, may need to have that interaction there, may actually end up closing as a type 1. Obviously, with that much momentum, you wouldn't want to trade against it, but it's just something to keep an eye on. If we did break through, maybe we'd accelerate towards the extension levels. Obviously, it was expected if there's a sign that we might be tightening monetary policy soon, it's going to be negative for gold. But gold hasn't exactly been reacting the way we'd expect recently when you look at the bond market, for example. It's been a strange situation altogether. And then just finally, Euro GBP. I said it was unlikely to break through, and you know what? It broke through. It kind of consolidated for a while, but we're right at this critical point now where, if we look at the weekly chart, for example, it's right there at the B point. So if it's going to hold up, It needs to pull its way back to above this double confirmation, above this path of resistance here. So we'll see towards the end of the session if that can happen. It's not one that I'll be trading now. I think that I'll probably keep an eye on the Dow. Now, I saw your comments on yesterday's video. Thank you very much for those. And I just want to say, first of all, someone commented asking if we could look at gold and silver. It was Yashin. So here we are talking about gold. I pointed that out just a moment ago. But I appreciate all your comments. Someone was saying we should do more videos explaining the different things like what PMI is, GDP, how they affect the markets. We will be having those videos coming out. It's something that we'd planned and discussed before. So you'll be seeing those coming soon. And also for Tom Quimby, got a new shaver. Alright guys, thanks for watching. Hit the thumbs up button if you liked it. Don't forget, if you want to know more about how I trade, the link is in the description box. Hope you're feeling that Friday feeling. Have a great weekend and I'll see you next week. Take care guys.